I saw this. I put this on the screen. I don't know if I hope you guys can see. This is
Yep.
the Jeff Clark posted this on his Twitter, and I
Right.
retweeted it here. This was the average silver price based on the PM fix for each of these years. And while I get it, in the past 18 months hasn't been wonderful, if you look over the past 3 years, silver investors and people who have been in the silver equities have nothing really to complain about. And I found it very interesting the way Jeff Clark presented this information over time.
Jim, that's hilarious. This is the graph of a poorly performing asset.
Yeah.
People
And when I
need
see
to,
people say silver's dead, it's like, are you
yeah.
serious? Yeah.
What happens, I think, is that people's perception, people want an asset class that performs before the next long weekend.
Yeah.
And they think that what they want is somehow relevant. Look at that number, 2019 to 2021, you're up from $16 to $25, and people are finding something to complain about.
And if you look at a lot of the silver equities, the miners or the explorers that have been in business over that time frame, most of them are up dramatically more percentage wise than those numbers right there for the underlying commodity, correct?
Correct.
Yeah.
And bear in mind, if past is prologue, the second half of the bull market historically has been much more dramatic than the front half.
Rick, with the incredible volatility in the precious metals market, do you believe that we will see the demand for silver triple soon?
Soon. You guys are always
next
trying
weekend,
to make it time.
Next weekend, Rick.
You're trying to make it time sensitive because your younger audience doesn't have a sense of perspective. I don't know about soon. I think that we've been conditioned by 40 years of benign economic climate to expect a continuance of benign economic climate. So I wouldn't expect public perceptions to change for perhaps a year, perhaps 2 years. I can't really tell you.
Mm-hmm.
I don't think it matters much. If what you're looking at is the type of increase that I see in precious metals prices and the type of increase that I see in precious metals equities, if you're a year and a half early, even with the time value of money, the rent that you'll receive, if I'm right, is so extraordinary that you can be 18 months early and it's not going to matter to you over the rest of your life. I realize it matters to people psychologically.
Yeah.
But the fact that people continue to ask themselves questions where the answer begins with if, preferring those questions where the answers begin with when, is a fundamental investing mistake. I think that it is highly probable that the circumstance that I described will take place. The question is when. And if you ask yourself a question where the answer begins with when, you're asking yourself a very, very, very high quality question.
Rick, what is the real silver squeeze about? Is it about the amount of physical silver bought by newcomers, or is it simply the market share of precious metals returning to their historic means?
I love that question. The silver squeeze, as we've discussed before, or what's commonly called the silver squeeze, which is millions of retail buyers buying silver and adding silver to their portfolio, has been important, I think. But the real silver squeeze, from my point of view, comes about when the largest institutional investors in the world recognize that the 40% of their portfolios that they have involved in debt instruments needs to be changed. 40% of institutional portfolios aren't performing, and the institutional managers are going to need to change their investment behavior. And I believe that some amount of that money will find its way into the silver market. And I don't think that there is sufficient silver, or certainly silver equities, to satisfy that demand. Specifically, and we've talked about this before, the market share of precious metals and precious metals related assets in the United States market for savings and investment is less than 0.5%, which is to say 0.5% of the savings and investment assets in the United States market are made up of precious metals and precious metals related securities. Historically, the mean valuation of precious metals and precious metals related assets, or put differently, the market share, has been between 1.5% and 2%. At the very least, over the next 5 years, I think that precious metals will return to mean. which means that demand for precious metals and precious metals related equities in the United States market, the most important savings and investment market in the world, will triple or quadruple. In my heart of hearts, I don't think that we're going to have reversion to mean. I think that we're going to overshoot mean. But I don't need to overshoot mean to make my case. A circumstance where the Harvard University Endowment, the Stanford Endowment, Teachers Investment and Annuity, the Saudi Sovereign Wealth Fund, the Chinese Sovereign Wealth Fund, Norges Bank, to the extent that the largest institutional investors in the world increased their holdings in precious metals from zero to their 3-decade mean, would lead to a tripling or quadrupling of demand for silver. And that would be a real silver squeeze, a real silver squeeze, a squeeze of a dimension that I don't think that we have seen since the 1970s, a squeeze that would in fact put the efforts of the Hunts in the 1970s into proper perspective. You know, 3 fat boys from Dallas did a pretty amazing thing to the silver market, but nothing compared to what the largest insurance companies and endowments and pension plans in the world will almost necessarily have to do over the next 5 years.
The Hunt brothers back then in the 70s up until what, 1980, when the plug got pulled, they did it with a lot of leverage, a lot of
That's
a lot
correct.
of margin. And the difference, and I got to admit, I hate using the word silver squeeze, because that implies that it's a short-term, you know, pump and dump. And I don't believe that's what this is now, what it's morphed into. When you have millions and millions of retail buyers buying the physical silver, that's no longer a silver squeeze. That's more like a generational removing it from the market in order to, I don't know how to phrase this anymore. Do you sort of see it? I guess that's how I see this, different than what the Hunt brothers did, right? They did it with leverage and it was a few people. We're doing it with the masses.
I see 2 things happening, and they're both important. I see the need for a behavioral change among individual investors, which would mean that I see individual investors abandoning the course of action that they've adopted over the last 40 years. I think one savings class for individual investors needs to be a medium of exchange that's simultaneously a store of value, which is to say silver or gold. I want to see real rather than fiat liquidity in individual portfolios. And I think that the silver squeeze was very useful in that it taught a million young people that they need to have an asset in their portfolio that isn't simultaneously somebody else's liability. That is classical money, which is silver. But the other side of the silver squeeze, I think, will make more impact on the price, which is to say very large institutional investors. Let's look at Norges Bank, the sovereign wealth fund of Norway. Their net asset value is now well over $1 trillion. And their holdings of precious metals and precious metals related assets are, to my knowledge, 0. If Norges Bank were to allocate 3% of their assets to precious metals, that would generate, by my calculation, about $30 billion worth of buying.
Yeah.
That's the stuff of the silver squeeze.
Yeah.
That's $30 billion worth of buying from one motivated buyer. Extend that to Abu Dhabi Investment Corporation, to CITIC, to Kingdom Holdings for Saudi Arabia, to the Stanford University Endowment, to the largest insurance companies in the world. And you understand the probability of a quantum increase in demand for precious metals as a consequence of disintermediation out of debt instruments, where these largest institutions of the world are 40% invested. That's the silver squeeze that I see. Imagine Norges Bank in the next 5 years trying to buy $30 billion worth of metal, precious metals or precious metals related assets. And imagine them trying to do that in the company of all their fellows and peers. The global market cap of precious metals and precious metals related investments, from my understanding, is somewhere between $8 and $9 trillion, against the market capitalization of all asset classes worldwide being $650 trillion. It doesn't take a major change in behavior to generate really, truly massive buying. And the changes in behavior that I'm talking about would be merely rational responses to a world that pays 150 basis points interest on savings in currencies that are depreciating by 6.5%. In other words, the action that I'm talking about is a muted and rational response to a set of circumstances that's already in place.
Brick, before we were recording, we were talking about uranium in the boot camp. Can you explain that to our audience?
Yeah, you asked me earlier, what I'm doing in my declining years, what I'm doing with my life. And one of the things I'm doing is this year I intend to put on 4 educational webinars, 6-hour-long virtual conferences. These conferences will be about uranium, silver, royalties, and exploration sequentially. The uranium conference will be held on March 19th. I'll distribute information through you to your attendees. We'll have what I consider to be the finest experts and analysts in the uranium business, including representatives of the largest uranium producers in the world, some uranium exhibitors, $99 attendance fee, absolute 100% money back guarantee. The risk is mine, not yours. If you don't think that you got your $99 worth, let me know. I'll give you your $99 back. But I'm really looking forward to doing that. I've had so many questions about both uranium and silver speculation from people that I really believe that a 6-hour-long online conference, a boot camp, if you will, is really warranted in the market. I'm really looking forward to doing it.
Hey, Rick, we just did a meetup event in Denver and met a lot of fans from both our channel and some other YouTube channels. And one of the questions I got was from a young lady named Brittany. And her question was, how do people get involved in investments that fit what we think is going to happen? And I was thinking about your ranking system. You have this website where people can contact you and get your opinion on rankings. So I wanted to put that out there, specifically for Brittany and for others who are in that same place where they're trying to figure this out.
Well, it's very kind of you to mention that, Jim. I enjoy having discussions about natural resource investing, as you by now doubtless know. And one of the ways that I encourage that is by encouraging all of your readers to submit their natural resource holdings to me. Please, no pot. Please, no crypto. Please, no technology. No stuff I don't understand. Go to a website, ruleinvestmentmedia.com. List your natural resource investments, and I'll personally rank them 1 to 10. I'll also comment on individual issues where I think my comments might have some value. And if you mention charts in the question line, I will include in my return email the Barron's Gold Mining Index, which I think is the best pictorial examination of past precious metals bull markets. And on top of that, I'll send a 110-year commodity chart that talks about just how cheap commodity prices are relative to other asset classes going back 110 years. Once again, that's ruleinvestmentmedia.com. The other thing which I'm happy to do for people who respond to the rankings is include information. Many people know that one of the things I'm doing in retirement is backing a team that I backed in the past in starting a brand new bank, which will be very, very, very focused on precious metals. If you include the word bank in the comments, I'll put you on the list to receive information about being a borrower or being depositor in our bank, if you care. Hundreds of people had. Further, I'm no longer constrained by securities laws. And I can also tell your people, I maintain an absolutely complimentary list notification list of private placements that I'm involved in. Every time I get involved in a private placement, I send out to my list the private placement that I'm getting involved in, why I'm getting involved in it, what I think the risks are, and that's absolutely free. To any of your listeners who are accredited investors who care about what I'm doing myself in the private placement business, if you mention private placements or placements in the rankings request, I'll put you on the private placement list. This is an absolutely free service, something I couldn't offer for 30 years when I was securities licensed, because the securities people regarded that as a solicitation. But since I don't get paid, I'm not soliciting anything. And I enjoy, once again, my First Amendment rights of commercial freedom of speech, which I'm exercising to the fullest degree possible. So once again, ruleinvestmentmedia.com, I'll rank your portfolios. If you care about my bank, say bank. If you want my charts, say charts. If you are accredited and care about the placements that I personally am investing in, I take no commission for this. I charge nothing for the notification. Nice. Write down placement.
You are going to have one of the biggest email lists for raising money, I think, for private placements in the industry.
I'm not raising money.
Yeah, I know, but it's like you're gonna have one of the most powerful email lists, I think, in the industry.
Well, it occurs to me if I let the issuers know that 15,000 people are coming to me to get notification of placements, that I might see more placements and I might see them on better terms than I otherwise would have. And if I'm able to effectively negotiate on behalf of 15,000 investors, the terms and conditions around private placements, it might be that I get a juicier warrant for everybody than I otherwise would have done. One thing that I'll leave your listeners hanging with is a discussion that we had before we went online. I have a huge temptation to entertain a silver company or so that wanted to do a private placement and say to them, let's do it Shark Tank. Right? Let's go on your channel as an example, have 3 or 4 experts who write checks to private placements. Let's let the silver issuer that has the courage subject himself or herself to real time online due diligence around a private placement. I suspect that the successful issuer could sell out a placement without having to go to an investment bank. And I suggest that an unsuccessful issuer should probably pull their offering because they would have been embarrassed in public. And I think this would be a hugely fun thing to do.
Yeah, I think that'd be wild. We could do our own version of Shark Tank. We'd have you, Brent Cook, and Michael Gentili, or some combination like that, ready to grill whoever wants to, try to raise money. And take the good with the bad and see what happens. That'd be hilarious.
I suspect that a company that subjected themselves to that would either be a very virtuous company or were at least dumb enough to believe that they were virtuous. I think it might be a self-selecting audience.
Or get a great geologist there also to rip them apart. But anyway, Rick, thank you very much for joining us. We really love having you on. The audience loves you. And we'll do it again many times this year.
Always a pleasure, gentlemen. Keep up the good work. Keep the faith. You're going to have a real good 5 years from my point of view.